Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of October 13th, 2025. Let's get started. SEAF signals for this week. We retain technology and utilities, and we swap out healthcare, or we swap out consumer discretionary for healthcare. Healthcare being the top three. Overall, we've seen some strength both in technology and utilities with ones across the board and twos across the board. These high numbers, show a little bit of conviction in terms of what we're seeing in terms of the asset flows. And then we got threes in the trading and the tactical for healthcare with an 8 kind of holding down this overall score. Outside of that, obviously you can see consumer discretionary taking a little bit header, having that reverse momentum going from 4 to 9 to 11, dropping down to 24, which is neutral, but trending in the wrong direction. And healthcare sits currently at the bottom. Looking into our heat map for this week, kind of key thing I wanted to note here is outside of our top three, we almost had no asset inflows for anything down. Just to note, materials for the trading week was 0.02% increase, being at number 4. So we did have outflow negative 2% for consumer discretionary, but in general, the money was really just flowing into these top three, as we were seeing. We see accumulation across the board here in technology with these dark greens. A little less accumulation here for utilities and healthcare. They were building themselves up a little bit. We got a little bit of accumulation on the strategic quarter, and then some decent flows for the trading week. Number one technology at 0.32, so just shy of that 0.4 mark that we normally like to see. Overall, on the week, we had 3 of 5 down days. Now, that means out of the 11 sector spiders, I take looking at the net flows, 3 of the 5 days were down in terms of assets flows coming out of the 11 sector spiders. This for a total of negative 2.37, with the majority of the damage happening on Friday, which had a negative 2.43% outflow in terms of total asset flows out of the 11 sector spiders. Like I said, this is nicely aligned here up at the top, though we are missing a little bit of the accumulation here on the tactical month and strategic quarter, with technology kind of being the only one showing that major asset accumulation. Our total sector TNA chart here. We did break through that 21-day moving average. So for those of you not familiar with this chart, I add up all the assets under management for the 11 sector spiders to one number. And overall, since we've been kind of tracking this a little bit more forward, seeing some positive correlations with when the assets are consistently under the 21-day moving average, price depreciation in the S&P 500. This is a price chart of the S&P 500 down at the bottom. And when we're sitting above the 21-day moving average, we see price appreciation in the S&P 500. We did drop below the 21-day moving average. What we need to find out is this a sustained move like we had going from February to April, or is this a little bit of a hiccup like we had here in November, early December of 2024, where we got down below just for a little bit, had a minor correction, and then resumed trend. So that'll be to be determined, but asset flows did drop below that 21-day moving average. We did have that big down day on Friday. So just a thing to keep an eye on. Is this mean to sell out of your entire position? No, it is just one indicator determining that there is a little bit of weakness at the moment. But we will want to track this thing going forward a little bit more to see if it sticks below that 21-day moving average, or if we just have a brief interlude like we did a couple of times in Q3 and Q4 of 2024. Heading into our rainbow charts, technology remains king. We have this nice, really strong uptrend relative to our performance versus SPY here at the bottom. Daily SEAF score at the top. We are in upper favored. We are in the top possible score that you can have for technology, 3s across the board. Note that this data is through the 10th, so does not include the Friday data. But to note, just that we're looking strong in technology, strong outflows or strong inflows, as well as nice positive relative performance trend. As of right now, money continues to flow into technology. Utilities, similar boat. This with 2s across the board, this is the highest score you can have when you have a score like technology, which is top with a 6 overall score. Heading into that upper favored territory, seeing that nice relative outperformance trend as we bottomed here in late August, early September, have really kind of rebounded and been really strong. Utilities can kind of go either way. If as a defensive cyclical nature, people need to keep the lights on, and also as a AI play. So utilities has been playing both sides of the fence, and as of late has been taking advantage of that with a nice, strong relative outperformance versus SPY. The thing I do want to mention though is, again, for those new watching this video, for those of you that have watched it before, I apologize, but this model does not predict. We are not trying to project cash flows out into the future. So what happens today isn't necessary, or last week isn't necessarily going to pull forward to next week. But oftentimes we do see these trends as we sit in this upper favored for longer periods of time. We do have these longer bits of trend of upward relative outperformance versus SPY. It is not guaranteed. It is not a one-to-one relationship, but it does rhyme. So when we do see sustained time in favored, we do see these sustained moves in relative outperformance. We'll see what happens here. We had a big down move on Friday. I'm recording this on Monday, and the market has been up. What is it? Currently up about 1.5%. By the market, I mean the S&P 500. So we'll see how things go. But as of right now, as the data through Thursday, strong uptrend in utilities, and seeing that relative outperformance versus SPY pull away. Healthcare sitting in lower favored. Again, being as we mentioned earlier, being a little bit held back by its strategic quarter, as healthcare was a kind of, as we can see here, sitting in that deep void for quite a bit of time. We did make a couple of little attempts here to stick into favored and corresponding relative outperformance moves. We'll have to see what healthcare does. If we can really kind of start to push into this upper favored for a little bit of time, or upper mid favored, we do see nice spurts of relative outperformance that can happen during those times. Otherwise, this could be fleeting. And the thing with the SEAF model is we're trying to catch the money as it's moving into the various sector spiders. And sometimes you see this pour of money come in, investors get excited, and then the idea doesn't stick and you see the money flow out. We've seen that happen a couple of times here. So the reason we picked the top 3 is it back tested the best in terms of being able to grab those sectors that are really starting to take off. And oftentimes we can get in early. So, theoretically here, and this, again, not happening, and I'm not projecting or even saying that I think it's going to happen, but what could happen is, we sit up and we start to get in this favor. We caught this move relatively early. We get in and we sit up and we can get a nice relative performance boom as long as asset flows continue that momentum into that space. Right now, healthcare is the top 3, seeing some nice flows on the trading week and the tactical month. So if we can really kind of start to push more of those flows in, it starts to build that momentum through the strategic quarter, get into upper favored, we could see some relative outperformance versus SPY. I also like to talk about the negatives. Consumer discretionary was sitting up into favor for a little bit. We did get a little bit of relative outperformance on that move, and now we have dipped down into a void and starting that downtrend of the outperformance. Now, if you look at this, we've really been in a sideways pattern going back to March of last year, or March of this year, I apologize. But we see these little spurts of relative outperformance versus SPY. So right now, consumer discretionary is a place to avoid. Last, but actually certainly least, is energy. As I've been mentioning, for energy, really going back to last year, we've been seeing these spikes in energy where money flows in strong for a week or two, and then it kind of drastically comes back out. Comes back in for a week or two, drastically comes back out. We had that going back here to the mid part of September. We didn't actually get into favor. Never was actually a SEAF signal, but we got up into neutral. And then money flowed back out, and we're back into this continued downtrend of relative outperformance versus SPY. I would love to meet the series of investors trying to spearhead this move higher for energy in terms of its relative performance, but we just haven't gotten there yet. Still lags the broader market going back to last year. Nothing to do in energy as it is a deep avoid. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.